Okay, so this video is going to be looking then at the errors that have appeared in past papers with relation to capital. So capital is anything that a sole trader puts into a business. So they can give the business money, they can give the business, a fixed asset, or they can give the business something that the business actually sells, in which case that would be purchases, is seen as purchases. Okay, right, so let's take a look at some of the ways that the questions can come up. So the first one here, owner's private asset presented to the business and that was later sold, so incorrect treatment of either one or both of them. So the first part might have been entered correctly, or the second one, or both. Okay, so 2018, the garage owner's private car valued at $10,000 was presented to the business for resale. So no entry was made in the books regarding this transaction. This car was later sold on credit to a debtor of the business for €10,000. The sale had been treated as a cash sale. Okay, so this is how it should look when we use our green and our red pens. So the garage owner's private car valued at $10,000 was presented to the business for resale. That actually happened, so we highlighted green. So the mistake there was that no entry was made in the books regarding this transaction. This car was later sold on credit to a debtor of the business for €10,000. The sale had been treated as a cash sale. So the incorrect treatment there was that it was treated as a cash sale instead of a sale to a debtor. So what should have happened? So the capital account should have been credited by $10,000 because capital is a liability. When a sole trader gives something to the business, we credit the capital account. Why is it a liability? Because the business owes any money that the sole trader put into the business back to the sole trader. And now this business is a garage owner, so that's very important to note there. So the garage owner's private car was given to the business. So when it is something that the business sells, that is going to debit the purchases account. Okay, so it's when it's stock that a business actually sells, it's the purchases account. And now this car was later sold on credit to a debtor of the business. So what would happen there? Well, our asset debtor would increase. So it would be debited on the 10,000 obviously on the debit side of the debtor account, and then the sales is our revenue, so our sales would increase, so we credit the sales account. So what happened by mistake? Well, no entry was made with regards to the capital and the purchases here, but what happened with the sale was that it was treated as a cash sale instead of a credit sale. So a credit sale, we will have our debtors and our sales, but a cash sale, so the bookkeeper recorded it, that cash was actually received, and not that it was that somebody still owes you the money. So you can see here the sales was treated correctly, so we don't have to fix that. So let's see how we will fix this. So we'll enter the capital and the purchases, okay, as we should have done over here, and then the debtor, we have to enter that as well. But the sales has already been entered, so therefore we don't have to enter that at all because that was correct. But with the cash here, how will I fix that? Well, I'll enter that on the opposite side, which is the credit side, so that's 10,000 there. So we journalize the entries, so we simply just put them in there, and then we'll come up with our little narration. So being recording of capital introduced and correction of credit sale treated as a cash sale. Now, next one then we have payment for expense paid from owner's private bank account and no entry was made in the book. So this here, as you can see there, it's a popular one. We've got 4 years in which that came up. So let's have a look. So in 2014, the business is a grocer and a cheque for 4260 was paid by the business owner out of a private bank account to cover 15 months hire of equipment for the business up to 31st of the 3rd, 2014. So that is 3 months into next year and no entry had been made in the books. Right, so what should happen there is that we should, firstly, we will credit the liability account, the capital account there by 4260. But hopefully you will know if we have 3 months into next year, right, that will be rental of equipment prepaid. So I hope you know that an expense prepaid is an asset in the balance sheet. Okay, so you can see here, equipment rental in the balance sheet, that is an asset. So that will be in the current assets in the balance sheet, 852. Now, equipment rental then for the year is an expense in the trading profit and loss. So we put just whatever needs to go in for the year into the trading profit and loss. And this is how we split it up. So this 3408 is 12 months. Okay, and then this 852 is 3 months. So how did we get that? 4260 divided by 15 multiplied by 12 goes into the trading profit and loss for the year for the 12 months rent. And then 4260 divided by 12 multiplied by 3 is what we have prepaid at the end of the year. So what happened by mistake? It was completely left out of the books. So the fix it is the exact same. And now hopefully you'll know whenever it's the same, whenever you just haven't entered anything into the books, what should have happened and fix it, they're the same thing. You don't need to rewrite that out. So rental into the P&L, 3408, and then rental prepaid in the balance sheet because that's an asset there. So that's the asset and that is the expense for the year. And then your liability is your capital account 4260. And the narration there being the recording of private funds used to pay 12 months rent for the current year and 3 months rent prepaid. Okay, next question then is the 2010 question. So the business is a motor dealer. So a cheque for 5250 paid by the business owner out of a private bank account for 15 months hire of diagnostic equipment up to the 31st of the 3rd 2010, so that is 3 months into next year, had not been entered in the books. Okay, so exact same as the last time, we should have the liability capital increasing on the credit side, 5250, because that's the full amount that the sole trader put in. Now, this is 12 months. So 12 months out of the 15 months, which was 5250, will go into the P&L. And that is the expense for the year. And the expense is debited there. And we've got 3 months rent prepaid, which is an asset. So any expense prepaid is an asset. And that'll go into the balance sheet in the current assets at the end of the year. And that is 3 of the 15 months there. So the 5250 is split up 12 months into the trading profit and loss as an expense and 3 months into the balance sheet as an asset. And again, the mistake, nothing happened. So your fix it is exactly the same as what should have happened. So you don't need to write this in anywhere, but journalise the entry and write the narration. We've got rental in the P&L, 4200, rental prepaid in the balance sheet, 1050, and then capital 5250 then on the credit side. And that is being private funds used to pay 12 months rent for the current year and 3 months rent prepaid. So that is your narration there. Next, 2006, so exact same again. A cheque for 2250 paid by the business owner out of a private bank account, so capital again, for 15 months hire of diagnostic equipment up to the 31st of the 3rd 2006, so that is 3 months prepaid to next year, had not been entered into the books. Okay, if you want to pause the video here and test yourselves, you can. So let's have a look then what should have happened. Okay, so the liability capital, we credit that 2250. The equipment rental for the year, okay, the 12 months is 1800, so that is an expense. Expenses increase on the debit side. And then the asset equipment rental prepaid is 450 on the debit side there as well. What happened by mistake was that it was completely left out of the book, so the should have happened and the mistake, the fix it, are exactly the same. Again, your narration on your journalising of the entries, rental P&L 1800, rental prepaid balance sheet 450, and capital 2250. So that is being private funds used to pay 12 months rent of equipment for the current year and 3 months for the following year. Now, you might be thinking, actually, is it important to write P&L and BS here? So the BS here, this is the asset one and this is the expense one. And I will say yes, it is important. Not to get the marks, but it'll be important for you guys when you're going to fix your trading profit and loss and your balance sheet in that element of the question. So people do mess that up. So I would say, yes, that is important. Okay, again, 2002. A cheque for €3,000 paid by the business owner out of a private bank account for 15 months rent of garage up to 31st of the 3rd, 2002. 3 months into next year had not been entered in the books. Okay, again, I would say pause the video and then I will just show you the answer. Okay, so I hope you got that answer there. So again, rent in the P&L, that was for the 12 months. That's the expense there. We've got the 3 months rent prepaid. That is an asset in the balance sheet. And then the capital, the liability capital, is that'll go into the balance sheet as well, being private funds used to pay 9 months rent for the current year and 3 months for the following year. All right. Next we have payment made for business debt by owner from own private bank account after cheque from business bank account Dishonored. So this came up in the 2020 exam. So payment made for business debt by owner from own private bank account after cheque from business bank account Dishonored. So what does Dishonored mean? Dishonored means that there was actually no money in the business's bank account for the cheque to actually work. So whoever the business gave the business cheque to obviously went to the bank and actually couldn't get the money out because there was no money in the business bank account. So what they would do is they would just, whoever the business gave the money to would just contact the business owner and say, that money never came out. The cheque bounced, so you obviously don't have money in your account. Can you please send money in a different way? And this business has, because they've taken money out of their own bank account. Okay, so 2020, the business is a garage owner here. So the business owner sent a cheque for €920 in full settlement of a business debt of €990, and this was recorded correctly in the books. However, no entry had been made in the books for the dishonouring of this cheque and the subsequent payment of the amount in full by the business owner from a personal bank account. Okay, so let's take a look at this then. So what should have happened here? So business owner sent a cheque for $920 in full settlement of $990, and this was recorded correctly in the books. So if that was recorded correctly, we don't need to do that again. Okay, so we should just be leaving that blank. Now, no entry had been made in the books for, this is what we need to actually enter, the dishonouring of this cheque and the subsequent payment of the amount in full by the business owner from a personal bank account. So the mistake here was that no entry had been made about the dishonouring of the cheque and the subsequent payment of the amount in full by the business owner from a personal bank account. Okay. So what should have happened then when a cheque that the business sent was dishonoured? Okay, so the cheque was for $920, but the debt was $990. Okay, so the cheque, let's think about that again. The cheque was $920, but the debt was $990. So who had they owed money to? Well, they owed money to a creditor. So the difference between these two is €70. So they must have got €70 discount. So I'm going to just highlight then the first part of that. So this is the $920 coming back into the bank. Now, $920 isn't actually coming back into the bank because the $920 never left the bank because the cheque was dishonoured. So when the cheque was sent, it was recorded here. So we're just going to undo it and do the opposite. And there we go. We're going to debit that back in there. Then what we're going to do is we're going to say, well, we owe the creditor $990 again because our cheque was dishonoured. But, you know, the difference between these two, we need a 70 on the debit side here, right? So if we received a discount when we paid the cheque, it's now going to be, you know, discount received disallowed then whenever our check bounced. So that's the first part of that there. The next thing that we will do is we will start here, okay? We're going to record now the subsequent payment of the amount in full by the business owner from a personal bank account. So the business owner paid from personal bank account, that is $9.90 on the credit side of the capital account. So $9.90 credit side capital account. And then the creditor, the debt to the creditor reduced because the business owner paid for that. So that is it, right? So the mistake was that error of omission, nothing was recorded in the books. And then the fix it is just the exact same as the what should have happened here. And so then we enter the entries here. So we've got bank 920, discount 70, creditor 990 and 990, and capital 990. And the narration being omission of a dishonored check issued by the firm and new capital introduced to cover the payment. Now, again, people will say, do I have to enter both of these? You do. You won't get full marks if you don't. You need to show the two different transactions that happened, because two things happened here. The check was dishonoured and then the debt to the creditor was paid. So you do need to enter both of them. Now, we have owner won a prize and donated to the business. So again, a popular one, 2014, 10 and 8 here. So this is a bit of a funny one, but we'll see what happened here. So the business owner, who is a grocer, won a private holiday prize for two, worth €6,000 in total. One ticket had been given to a salesperson as part payment of sales commission for the year, and the other to an advertising firm as payment in full of a debt of 3250. No entry was made in the books. Okay, so how should this look then? So what happened here, one ticket from this 6,000 holiday prize that was won in the business owner's personal life was given to a salesperson of the business as part payment of sales for commission for the year, and the other to an advertising firm as payment in full of a debt of 3,250. So the advertising firm there would be a creditor. Now, some people don't know what commission is. Commission is a payment made to sales staff whenever they sell the goods that the company sells. So it's like a percentage of the sales. So what should have happened here? Well, what should have happened is that the 6,000 was capital because the business owner give the two tickets. Okay, very strange that one would be given to a salesperson and another to a creditor. It's very unrealistic that would happen because nobody would want that. But anyway, so the liability capital increases on the credit side, 6,000. The commission, the wages, so that is an expense, increases by 3,000. So the expense increases on the debit side. The creditors, the advertising company. So creditors is a liability and they reduce on the debit side. So 3,250. So our debt to them was 3,250, but we give them something worth 3,000. And as you can see, your debits and credits don't equal here. So we need another 250 on the credit side. So therefore, we received a discount from our creditors. That's great. So that is an income there on the credit side. So what happened by mistake? Nothing happened by mistake. Okay, the mistake was that nothing was recorded. So to fix it, then we have to just put in the same as what should have happened. So no need to write that in again. But anyway, here we go. So we put down commission 3,000 on the debit side, creditors 3,250, debit side, capital 6,000, and then discount. And we know it's received here because it's on the credit side, and that is revenues. So being recording of capital introduced used for the purpose of clearing a debt and payment of commission to a sales staff, whatever. It just has to relate back to the actual text that is written in front of you. Okay. Right. Next then, exact same thing. If you want to try and pause this video and attempt it yourself, you absolutely can. So the business owner won a motor vehicle valued 3,000 in a draw, and it's important to note that the business owner here is the motor vehicle, so they sell motor vehicles. The business owner gave the vehicle to the business and took an old vehicle from the business valued at 22,500, which was to be used for private purposes. The only entry made in the firm's books regarding both vehicles was a debit in the cash book of 22,500. So let's have a look here. So McCarthy was the business owner here. So if McCarthy gave the vehicle to the business and took an old vehicle from the business valued at 22, well, what happened is that the capital 30,000, but then he took something out 22.5. So you can have a capital account and a drawings account. That's absolutely fine, but there's no need. You can just put them both into the capital account. So that's 7,500 is the balance of the capital account. And then the purchases, 30,000 on the debit side purchases, because when a business owner puts something into the business that the business sells, that goes into the purchase account. So again, he took something from the purchases worth 22.5, so overall 7,500 in the purchases. So let's look now what happened by mistake. So the only entry made in the firm's books regarding both vehicles was a debit in the cash book of 22,500. So you can call that cash, you can call that bank. They're kind of okay with using them interchangeably, but if there's only bank in the balance sheet from the question, just use bank there. So that was the only entry, debit of cash book. So completely wrong. So how do we fix it? Well, to fix it, we will enter these two. Okay, so that's them there. And then to fix this, we will enter it on the credit side of the cash or bank. And then our debits and credits don't equal, so we have to put 22,500 on the debit side of the suspense account. So this is how it will look. So capital account 7,500 on the credit side. We've got purchase account 7,500 on the debit side. We've got cash or bank there 22,500 on the credit side, and suspense 22,500 on the debit side. So that is being capital introduced in the form of a motor van and the cancellation of an incorrect entry in the bank account. So that is that done there. Okay, so 2008. Now again, if you want to try and pause it and attempt it yourself, but before you do that, just note that the business is a boutique owner and the item that was put into the account or into the business is a motor vehicle. Okay, so the business owner won a motor vehicle valued at €20,000 in a grand prize draw. The business owner gave the vehicle to the business and took an old van from the business valued at €8,000, which was to be used for private purposes. The only entry made in the firm's books regarding both motor vehicles was a debit in the cash book of 8,000. Okay, let's look at the should have happened and the mistake here. So what should have happened, the business owner gave the vehicle to the business and took an old van from the business valued at 8,000, which was to be used for private purposes. The only entry made in the firm's books regarding both motor vehicles, debit in the cash book. Okay, what should have happened? This is going to go into the motor vehicle account. It's not like the purchases account in the last question, because this business does not sell motor vehicles. So the motor vehicle is an asset which increases on the debit side. So 20,000 was put in, and then they took an old van worth 8,000. So overall 12,000 debit side. Now capital account. Capital is a liability. When the business owner puts something in, we credit the capital, and then when they take something out, we can debit the capital account. You can also do a drawings account and debit the drawings. That's absolutely fine. They will accept both, but overall there 12,000 on the credit side of capital. So what happened by mistake? So only entry was 8,000 debit in the cash book. And again, if there's just a bank account in the balance sheet, I would say put it into the bank, but they're quite happy to use cash or bank in the past. So hopefully there will be again. Okay, so how would we fix it? So we'd put the 12,000 and the 12,000 into the debit and credit side of those motor vehicles and capital accounts. To fix this, we will put the 8,000 on the credit side of the cash and bank account, and then you'll see they don't equal. So therefore we need to put debit 8,000 in the suspense account. So to journalise the entries, we've got motor vehicles 12,000 on the debit side, capital 12,000 on the credit side, cash or bank 8,000 credit side, suspense 8,000 debit side. And that is being capital introduced in the form of a motor van and the cancellation of an incorrect entry in the bank account. So that is that. Next here we have private debt owed to the business owner offset against a business debt, and this came up in 2020 and 2012. So a private debt of 1,500 owed to the business owner as an individual, as a person, and not the business, had been offset in full settlement against a business debt of 1,660 owed by the business owner. No entry had been made in the books in respect of this transaction. Okay, right, so what should have happened is that a private debt of 1,500 owed to Beglin as a person, that's my attempt to draw on the person, okay, so as a person, was offset in full settlement against a business debt, so against their business of 1,660 owed by Beglin. Okay, so he was owed money personally, and he's taken a hit. He's not going to get that 1,550 because he's saying to somebody else who owes his business money, we'll call it quits. Okay, so therefore think to yourself, is he putting something into the business or taking something out of the business? And hopefully you'll know he is putting something into the business, and that is capital. And capital is a liability to the owner because the business owes that back to the owner. So we credit capital 1,500. Now, it had been offset against a business debt owed by Beglin's business. So if we have a business debt owed by our business and then it's been completely offset, that is our liability. The creditor, we now owe them 1,660 less than what we had. Okay, and as you see here, our debits and credits don't equal. We're 160 down. So the debt to us, to Beglin as a person, was 1,500, and the debt that the business owed was 1,660. So he's got off with 160. So that is a revenue discount on the credit side. Okay, so that is what should have happened. What happened by mistake was that nothing was entered, so the fix it and the what should have happened are the same. And then we'll journalise the entry and write the narration. So being omission of a creditor accepting equipment in payment of a debt is enough to get you your 1 mark there. So again, just reflect back to the error there. Okay, so 2012. So if you feel confident that you understood the last one, maybe you want to pause it here and have a shot yourself. So a private debt of 1,000 owed to the business owner personally had been offset in full settlement against a business debt of 1,260 owed by the business. No entry had been made in the books in respect to this transaction. So what should have happened is that that first line there should have been underlined green there. Okay, so it is, this is your green, so everything in the first sentence should have been put in. So again, a private debt owed to the business owner personally had been offset in full debt settlement against a business debt. So that's your creditor there. Okay, this is capital because the business owner put something into the business, and then we'll see that we also have a discount. So capital 1,000 was put in by the business owner because it was a private debt owed to the business owner personally, was offset against a business debt. So the business owner personally put in €1,000 into the business. The liability creditor reduced by 1,260 because that's the debt that we had previously owed them, but now we don't because it was offset against a private debt to the business owner. And so there you can see your debits and credits don't equal. So obviously the creditors give a discount. And so discount is revenue if it's on the credit side. So discount received is recorded on the credit side. So what happened by mistake was that nothing entered, and so your what should have happened is the same as your fix it. So to journalise that then, capital 1,000 on the credit side, creditors 1,260 on the debit side, and discount 260 on the credit side. And that is being private debt owed to O'Connell offset against a debt owed to a creditor of O'Connell's business. Or you can say something similar as long as it reflects back to the question. So lastly then, we have privately owned asset sold to a debtor treated incorrectly. So this came up in 2014 and 2008. So business owner's private car valued at 88 was presented to the business. He took a used freezer from the business to an agreed value of €800. The only entry made in the books was a debit of 800 in the equipment account, and the freezer had a book value of 1,300. So the mistake here was that there was completely did it wrong there, but this is my green, can't change this. Business owner's private car valued at 88 was presented to the business. He took a used freezer from the business for an agreed value of 800, and the freezer had a book value of 1,300. So that is what happened what should have happened. And what happened by mistake was that the only entry made in the books was a debit of 800 in the equipment account. Okay, so let's see what should have happened here. So the business is a grocer, right? So if the business owner gave a car valued at 88 to the business, that would be our asset vehicle would increase by 8800, and the capital account would increase by 8800. So capital is a liability, increases on the credit side. Now, when he took a freezer from the business, all right, so that is drawings here. So it's also like the opposite to capital. So drawings is really the opposite of capital, okay? And I think they would have allowed you to do take your 800 out of there as well. But we have debit drawings. We always debit drawings, credit capital. So debit drawings of 800 on the debit side. So we DD, debit drawings. And then you will reduce the equipment by 1,300, okay? And then we made a loss on the sale, okay? So a loss is an expense, and it'll go into the P&L, loss on sale. And how did we get that 500? Well, 500 is the difference between what it was worth and what he took it from the business for, an agreed value of 800. So that is a loss on sale. And as you can see there, your debits and credits will equal when you put in that loss on sale. So what happened by mistake? The only entry made in the books was a debit of 800 in the equipment account, so 800 there. And for us to fix it then, we will debit the vehicle account, 8,800, credit the capital account, 8,800, so that's those first two. We'll debit the drawings by 800. The equipment, we will 1,300 on the credit side, and then we will bring this across here. So that is altogether 2,100 on the credit side. And then we have to enter the loss on the debit side there, 500, and then our debits and credits don't equal, so we have to enter 800 on the debit side of the suspense account. So to journalize the entries then, we just enter them all in, and then we write a narration that will link up with the error that we were told about in the question. So being the recording of a private motor car given to the business by Cagney and freezer taken as part payment. So that is that. 2008 then. The business owner sold privately owned jewellery to a debtor of the business on credit for 2,800. This sale had been treated in error as a cash sale of stock. The business owner intended that the proceeds of this sale were to be retained by the business. Okay, so what should have happened there is that the business owner gave 2,800, something worth value to the business, 2,800, and it was given to a debtor of the business. So a debtor is an asset there. Okay, so the business owner intended that the proceeds of the sale were to be retained by the business, so capital there. Okay, now what was the error in mistake? The error was that it was treated as a cash sale of stock. So it wasn't a cash sale because it's a credit sale, so a debtor was sold to a debtor. So cash, 2,800 on the debit side is what it was treated as, so that's an asset there, and sales is a revenue. So it was treated as a revenue by mistake. So how do we fix it? We enter the capital and the debtor on the correct sides there, and then we unwind what was done by mistake. So we debit the sales and we credit the cash. And that is us. So you enter the entries there, and that is being recording of a sale of private jewellery to a business debtor treated incorrectly as a cash sale. So they are all the errors that have occurred in the past exam papers relating to capital when the owner put something into the business. So remember, they put cash in, so you put it into the bank or into the cash account. Then if they put something in the business sells, that is treated as purchases. And then if they pay for an expense, that will just go into the expense account. If they've got an expense prepaid at the end of the year, then that would be an asset.